Welcome back to the Digital Asset Report. Bitcoin is starting the week near $76,000, while Ethereum is trading near $2,100. A strong pullback came alongside more than $660 million in crypto liquidations and roughly $1 billion in Bitcoin ETF outflows last week, as traders moved away from risk assets following President Trump's visit to China. Geopolitics is back at the top of the market story. Iran has reportedly introduced Hormuz Safe, a maritime insurance plan for ships moving through the Strait of Hormuz, with payments expected in cryptocurrency, adding new sanctions and energy risk layer to the digital asset conversation. Treasury Secretary Scott Bessent called on the G7 to sanction Iran. Take a listen.
The leaders spent a great deal of time together. Tomorrow we'll also be discussing sanctions and terror finance, and we call upon all our G7 and indeed all of our allies and the rest of the world to follow the sanctions regime so that we can crack down on the illicit finance that is fueling the Iranian war machine and get this money back to the Iranian people. So thank you all.
On Thursday, the U.S. Senate Banking Committee advanced the Clarity Act, a major crypto market structure bill that would define when digital assets fall under securities rules, commodities rules, or another category entirely. Every Republican on the committee voted yes, joined by Democrats Ruben Gallego and Angela Brooks. This is a major step. The bill still faces a difficult floor fight over anti-money laundering standards, consumer protections, stablecoin rewards, and conflicts of interest. But still, the direction is clear. Washington is trying to move crypto from a legal gray area into a regulated financial market. The same theme is now showing up at the state level. In Minnesota, Governor Tim Walz approved a law allowing state banks and credit unions to offer crypto custody services if they choose. It does not authorize trading or investment advice, but it does let trusted local financial institutions hold crypto for customers under state law. And internationally, Japan is moving in the same direction. The Financial Services Agency backed legislation to shift crypto assets under the Financial Instruments and Exchange Act, treating assets like Bitcoin more like financial products than simple payment tools. The framework is designed to strengthen disclosures, investor protection, and market fairness, while also bringing crypto under insider trading restrictions. Meanwhile, the stablecoin debate is going global. In the United Kingdom, Bank of England Deputy Governor Sarah Breeden said officials are looking at alternatives to the proposed stablecoin rules after industry pushback. The original plan included temporary holding limits and a requirement that issuers keep 40% of reserves at the central bank as non-interest-bearing deposits. And in buying news, Strategy purchased another 24,800 Bitcoin for about $2.01 billion last week. They now own 4% of the total Bitcoin supply. Over $1.9 billion were raised by selling STRC, the company's variable rates preferred stock. Various DeFi companies are also starting to bring STRC's 11.5 yield on-chain via tokenization. Michael Saylor recently had this to say about digital credit.
And so I think what's fun right now is digital credit is bringing the capital gains and the power of Bitcoin to the crypto and the digital assets ecosystem in the form of yield coins and DeFi. And we're seeing the two hemispheres of the industry, crypto and Bitcoin, come together. So instead of having capital and crypto that never finds Bitcoin and capital and Bitcoin that never goes into DeFi or crypto industry, now the capital flows in, it flows to yield coins, it flows to digital credit, it flows to Bitcoin, it loops back, and it invigorates the entire industry.
In Europe, Poland's parliament adopted a crypto regulation bill designed to align the country with the European Union's MiCA framework before a July deadline. The vote comes during a fraud investigation tied to Zonda Crypto, Poland's largest exchange, where prosecutors estimate user losses above $96 million. So this week begins with two realities at once. Prices are showing their first weakness in over a month, ETF demand has cooled, and geopolitical risk is pressuring the markets once again. At the same time, Congress is advancing market structure rules, Minnesota is opening the door to bank custody, Japan is moving crypto into financial instrument law, and stablecoin frameworks are being rewritten across major markets. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.